Buying land can feel overwhelming when you're just getting started, and it's not always clear what actually matters. So in this video, I'm going to break it down for you and clear up some of the biggest myths around buying land and building your dream home. That includes financing and development permits. I'm Heather Terrace. I'm a realtor with RE/MAX Landing, and I specialize in acreages, lands, and farms. And buying land is one of my favorite things to help clients with. But it's also where I see a lot of myths and expensive surprises that maybe we weren't budgeting for. So it's important that you stay to the end if you're buying a piece of land, because I'm going to cover all of this for you. Let's start with financing because it's one of the biggest questions I hear and has some of the biggest myths. I often hear, "Hey Heather, I heard you have to pay cash for the land before the bank will even consider giving you a construction loan." And that is a myth. And honestly, it scares a lot of people out of the conversation before they even get started. So let me tell you what's actually possible. You do not have to pay cash for the lot. A lot of financing programs can start between 25 and 35% down. Here's another one that surprises a lot of people, and it allows for low taxable income. So if you're self-employed or your income looks a little different on paper than what you actually earn, there are lenders who are willing to work with that. Now, I'll let a mortgage specialist handle this and walk you through the specifics, but what I can tell you is when you look at rates, some of the rates, if you have great credit, start at the same kind of rates as a resale home purchase. And in some cases, there are interest-only payment options that allow you to stay in your current home and keep the carrying costs manageable while your home's being built. And here's a big one. Some programs let you combine your lot financing and your construction financing into one convenient loan. The lot and the build roll together from day one, and you're not paying more than your down payment up front. The financing is designed for the journey. Now, every situation, of course, is different, and the right structure depends on your numbers, your timeline, and of course, the lender. But the important thing to know is that there are many different options. So if you're thinking about buying land and building, you can talk to a mortgage specialist early. If you're looking for someone to speak to, I can pass along some trusted advisors' contact information to you. Now let's talk about the county rules. Every county in Alberta has something called land use bylaws. These are the rules that tell you what you can and cannot do on a specific piece of land. And here's the catch. The Foothills County rules are very different from Rocky View, and Rocky View's rules are very different from Mountain View rules. You can't just Google acreage bylaws in Alberta and call it done. You have to check the bylaws for each specific municipality. Now, here's some things that you want to consider. First, outbuildings. How many are you allowed to have, and how big can they be? This is tied to your parcel size and your zoning. A shop, a barn, a garage that's detached from your house, and a Quonset, they all count. And there are limits on the total square footage and the number of structures. So if you're picturing this big shop for equipment and a barn for all the animals, you need to know what's allowed before you commit. The second thing you want to consider is animal units. If you want to have horses, chickens, cattle, goats, anything like the whole homestead, the county controls how many animals you can keep based on your parcel size and zoning. And it's measured in something called animal units. And each type of animal has a different measurement. So 2 horses is not the same as 2 chickens. So if your plan involves animals, checking the bylaws before you buy. Because if you find out after the fact that you can only have 1 horse, that's pretty heartbreaking because horses are like potato chips. You can't just have one. Third is a home-based business versus a home office. There's a real legal difference here in the eyes of the county. A home office is where you're taking calls, answering emails, and that's usually fine. No special approval is needed. But a home-based business where clients are coming to your property or you have employees or you're running large equipment, that's a different category. And often it needs its own approval. So if your plan is to run your business from your acreage, get clarity up front. Something else to consider is setbacks. The county has setback requirements from property lines, from the roads, from water, from wetlands. So picture this, you buy a 5-acre parcel and it's got this pretty creek running through it and some wetlands in the corner, and suddenly your buildable area just shrank, like significantly. Setbacks can be the difference between building the house you planned and having to redesign from scratch. And here's a little tip. If you're thinking about a parcel close to 10 acres, pay real close attention because the 10-acre mark is an important threshold in the foothills. Subdivision rules and what's permitted change significantly above or below that line. Even if you're not planning to subdivide right now, it affects the long-term flexibility and the future value of your land. It's worth understanding before you buy. There's another layer to the rules and you need to know about, and they don't all come from the county, and that's restrictive covenants. This one catches a lot of buyers off guard. Restricted covenants are there to protect everyone's enjoyment of the acreage community, and it's also there to protect the values over the long term. They're the reason you're going to want to buy into an acreage subdivision and know that in the next 5 years from now, your neighbor's not going to have 3 wrecked cars parked in their front yard and throwing metal all over the shed. So this keeps the neighborhood looking and feeling the way it did when you bought in. And that's a win for you as an owner. So what do they do when they actually cover it? It depends on the subdivision. I've seen covenants that set a minimum house size, or rules around the exterior finishes and materials, colors, fencing rules, standards about outbuildings, and up to where and how you can park your RV storage. And it's all designed to keep the community cohesive. Now, here's the part you need to know as a buyer. Covenants are additional rules on top of the county's bylaws, and they can never be looser than the county's rules. They can only be stricter, and they're legally binding. They run with the land. They stay with it from owner to owner. Before you write an offer, read the covenants, not after, because if your plan is to build a 1,200 square foot modern home with metal siding and the covenant says, no, that's not allowed, the deal is dead before it even starts. So the other thing to look at on title is the utility right-of-ways and the easement right-of-ways, meaning that other parties might have legal rights to use a portion of your land, usually for like a utility right-of-way, like a power line or a gas line, or an access for a neighboring parcel. And if there's a right-of-way running through the middle of your property, like a gas line or something, you generally can't build on it. So picture this. You find this beautiful piece of land. You're already pictured yourself in the house right there with these incredible views, but there's a gas line easement running right across that exact spot. Now you have to change where your build site is, and now your view's different, and that kind of surprise you don't want to get after you purchase. All right, so let's talk about the services you actually need to have to live on the land. So here's some good news. If you're buying a lot in an established subdivision, gas and power are usually ran to the lot line, and that's how most subdivision lots are set up. So you're not bringing in services from miles away, you're connecting from the edge of your property to your build site. But there's one thing you still need to question, and that is exactly where those services are next to your lot, and what's the cost that it's going to bring you from that service to your house that you're proposing to build. And here's the easy part. You don't have to guess. There's online tools that make this really simple. So here's what I tell my buyers. Before you firm up an offer, run the numbers and find out where the gas and power is sitting next to your property. Super easy. Now, water and sewer, that's a completely different conversation. If your parcel doesn't have municipal water and sewer, and let's face it, most of them do not have that in the Foothills County as an acreage, you're looking at bringing in a well and a septic system. Now, in the Foothills County, when a residential subdivision is getting created, the county makes the developer provide water on every lot before it can be subdivided. So if you're buying in an established country residential subdivision, the well is already there. You're not going to roll the dice on whether or not you hit water. That part's already done for you. Your job is to verify what's already been found, ask for the well report, check the depth, the flow rate, and the water quality, and budget for a fresh water test as part of your due diligence. Now, if you're buying raw, unsubdivided land, like a quarter section outside of a country residential subdivision, that's a different story. You might be drilling a well from scratch, and the results can vary from one property to the next. Septic is another piece. Here's what you need to know about, like from a high level as a buyer. There are two main types of septic systems that you'll run into out here, a septic field and a septic mound. A septic field is the one most people picture when they're picturing this. That's a tank that sits underground, and it treats the wastewater and flows through a network of pipes into a trench system buried below the surface, and you don't see it. The ground stays nice and flat. Now, a septic mound is the other option. It's much more common now. Instead of going into the ground, the system gets built up. So you literally have a raised mound on your property where it's treated through layers of soil instead of going just down into the ground system. Now, I'm not a permit expert. That's the builder's world. But there's a few things that you're going to need to know and understand timelines, because I see people are often surprised by this. In the Foothills County, sometimes you're going to need a development permit before you can get a building permit. Those are two very different permits from two different departments. A development permit is the county confirming that what you want to build on is actually allowed on your parcel under the land use bylaws. They're looking at things like, does it fit the zoning? Are you meeting the setbacks? Where's your septic tank going? Is how that's going to affect any type of runoff? And does your plan comply with the bylaws and the restrictive caveats? And now that permit can take up to 14 weeks to get approved. But once that's approved, then you can apply for your building permit. And that's where your house plans, your engineer drawings, and the construction details are going to be reviewed to make sure that everything meets the building codes. Now, this matters because people often assume they can just grab those building permits and start building. But in the Foothills County, a lot of the times you have to get that development permit first, and people are surprised with how long that takes. For specifics on what's required and the timelines and the full application process, it's best to go to the Foothills County's website. They've got all the details and forms and checklists right there. Your builder will walk you through what applies to your specific project. All right, we made it. Now let's talk about those two costs I promised you at the beginning. Now, these two costs can surprise people or catch them off guard. The number one is GST on land. When a buyer's used to buying a used residential home in Alberta, you don't pay GST. But when you buy raw land, GST often applies. That's 5% on top of your purchase price. Well, some lots will include GST in the price, some do not. And knowing that up front is an important part of your budgeting. Now, there are some exemptions and some recovery options depending on your situation, but you need to confirm that with your accountant. Now, when you build, you need to know that your property taxes are going to go up a lot. Right now, when you're buying raw land, the property taxes are super small. Sometimes really small, like a couple $100 a year. But the second you build a house on that land, the assessment changes completely. The county reassesses the parcel with the new build, and your property tax bill jumps, sometimes by thousands of dollars a year. So just make sure you include that in your budget. Hey, can you guys do me a favor? Make sure you hit that subscribe button.